Okay, Gnucash is a small accounting package which you can use for bookkeeping. I'm going to show how to set it up for a sole trader which is not registered for VAT tax in the UK. Now, sole traders are taxed on profit. Okay, so we're going to set up a fictitious company. Everything's going to be fictitious. I'm going to new file. We're going to use this wizard to do it. We're going to set up a say a gardening business. Garden business. Contact person is going to be Joe Gardner. So this is all fictitious. Their phone number is going to be 000 1 2 3 4 5 6, say. A company email is going to be something like joe@mail.com. Company website would be something like joegardner.com. And then the company ID. So when you register with HMRC, you'll get what's called a UTR, unique tax reference, which are usually 10 digits. So you need to put those 10 digits in there, I guess. So whatever your 10 digits are. We need to choose a currency. So we're in the UK, so we're going to choose pounds. Now we need to set up, this is the important bit, we need to set up the accounts chart. Got lots of different options. We don't want common accounts. What we want for this example is a business account. So let's just have a look at this and see whether it makes any sense. So this is not, it's just, we're not doing accountancy, but we'll just go through the main features. So with all companies, you have assets. That's something a company owns and controls, that has a benefit for that company. So a thing like a computer would be an asset. In this case, if you bought a spade, that would be an asset. Expenses are costs of doing business, so that you're going to costs associated with doing businesses. You might have to have insurance, you might have to pay rent or whatever it might be, and travel to your place of work. You've got income, so your income is basically your sales, the work that you do, so it'll come under sales here. There's other forms of income, but for this example we'll just consider sales. Liabilities are what the company owes, so it could be a bank loan. So if we look at our liabilities, we've got something called accounts payable, come back to the moment, and credit cards, so things that we owe. Now you notice that with any business account you've got accounts receivable, accounts payable. These are really important. So there's some explanation in the very good documentation that's provided by Gnucash. So accounts receivable, that's an account, are used by businesses to record sales for which they are not immediately paid. So if you've done some work, you made an invoice, but you haven't actually been paid yet, it's recorded in accounts receivable. Accounts payable records bills that a business has received but may want to pay later. So you may make an order for, say, to a vendor for some computer equipment or a spade or whatever it might be, but you actually haven't paid them, you've just made the order, you're going to pay them later. So that goes into your accounts payable. Very important, those for business usage. Okay, so what's this equity? Equity is effectively the difference between your assets and liabilities. Now, for a small company like this, think about it as your overall net worth, but in bigger companies it's what's left over for what's called shareholders, and so in a bigger company it'd be called shareholder equity, because obviously in bigger companies shareholders put money in to fund the company. So assets minus liabilities equals equity. And that's just about all you need to know at this stage. So we'll move on to the next one, and we'll notice that some of these accounts are placeholders. So assets is a placeholder, current assets is a placeholder. So what that means is you can't actually deposit money into these, they're just placeholders for sub-accounts. We're going to have a checking account now. A checking account is the bank account that you would set up for your business. So every business really should have a separate business account. You don't have to, but most people set up a separate business account to keep their own account, bank account different to their business account. It's called a checking account. We've got equity. We're going to put some money into this business in a moment. If I remember how to do it. Got expenses. So just bear in mind that some of them are placeholders, and we'll go next, and we'll finish our account. So need to save it. Let's call it Joe Gardner. Joe the Gardener. Let's just call it Joe. And we'll save it in a folder. Let's call it Garden Account or something like that. Just making this up as we go along. Okay, so everything's now saved. We need to save when we make changes, save regularly, but that's the basic structure set up. Now, okay, so where do we start with all this? Well, expenses is a big thing, so I won't look at that at the moment. So income, that's where our sales are going to be. Our liabilities are things we're liable for, as we mentioned. And we've got assets. And at the moment in our current assets we have this checking account. Our checking account is going to be our business account, which you've gone to presumably a bank and they've set one up for you. So we'll edit this account, and let's say our checking account is something that we've set up at a bank called Nat Best. Okay, some fictitious bank. Okay, so we know that that's our bank. Now notice in equity here we have an opening balance. I'm going to open this up. Now I'm going to put a transaction in here, and the transaction I want is the description I want. I'm going to put some money into this business, so I'm going to deposit or owner deposit owner deposit. Okay, so it's going to be owner deposit. Where do I want to transfer that to? Well, I think at the moment I'll send it to my Nat Best account, and I want to increase by say 2,000. So I'm going to put in 2,000. So hopefully, save all that. Let's just see what we've done. We put equity into the business of 2,000. And we transferred that initially into our Nat Best account, checking account. Now with any business you need customers and you need vendors. Let's start off with vendors, because we're going to have to buy some things for this business. So I'm going to vendor number 1. I'm going to have a vendor called Amagon. Okay. And the name of this vendor is called Amagon, and the address is, I don't know, let's say London, based in London, and the email is going to be amagon@mail.com, something like that. So we've got one vendor, so we're going to buy some things from Amagon in a moment, some computer or something like that. But with this particular business we're also going to need to buy some gardening tools, so we might have another vendor for doing that. Let's call this one B and K. So the business is called B and K, and let's say that's based in Yorkshire, and let's say their email is bk mail.com. Okay, so we set 2 vendors up. Let's save everything. Actually, while we're here, let's set up some customers as well, because you need customers when you're running a business. So let's say we've got our first customer is Mrs. Jones. Okay, Mrs. Jones. She wants some gardening work done. So the name is Mrs. Jones, and her address is 123 Jones Street. Again, all of this data is fictitious, and we need to contact her. So let's say our contact is jones@mail.com. Okay, we've set up Mrs. Jones. Let's set up another customer. So it's so reasonably realistic what we're doing. Customer 2. Let's say our second customer is Mr. Smith, and his name is Mr. Smith, and his address is 123 Smith Street, and his email is smith@mail.com. Okay, save everything. So we've now set up a couple of vendors, a couple of customers. Now we're looking at this business and we're thinking to ourselves, well, to set this business up, I need a laptop, I need a printer, I need toner for that printer and some paper, sending out receipts, and I also need a spade. So how do I do that? Well, I need to go to one of my vendors and buy something from them. So I need to create a new bill. So bill number 1, say, let's say we're going to go to Amazon. Okay, I don't think we need to put anything else in here, we'll just carry on. Right, so we've now come up to our little checkbook account, our receipting account. These looks like a checkbook along here. So what do I want to purchase from Amazon? I want to purchase a laptop. I can't do my business without connecting to the internet, so that immediately says to me there's an expense there for internet connection, but anyway, that's another thing. It's a material item. Now, expense account. Let's look at our options here. It's not an expense in that sense. The thing about this laptop is it's actually an asset. So let's just save that for a moment because I want to go back. It's actually an asset. Current assets. Actually, it's just an asset. It's a computer equipment asset, I think. But there isn't that there on our list. So let's see if we can do this. Asset, computer, equipment. Right, the account asset computer equipment does not exist. Would you like to create it? Yes. So it's account name asset, computer assets. So these are going to be the assets of the company. Let's just see what that does. You must choose a valid. Okay, so we choose that one. Assets. Okay, let's see if we can get away with that. Let's see what that's done. Save everything. Yeah, so we've now got computer equipment. We've got accounts receivable and computer equipment. Computer equipment is going to be assets in the same way forks and spades are going to be assets to this company, because if the company goes into liquidation, you can sell your computer equipment, you can sell your spade and fork, whatever it might be. Okay, what do we want? We want one quantity and the unit price is going to be 1,000. Now we're not doing VAT accounting here. This is not, I haven't set this as a UK VAT accounts system. So we are paying the VAT. The government gets the VAT. We're not being able, we can't claim the VAT back. Another video I'll do one where we set up a tax table to do that. But at the moment, that's all we're doing. Okay, so in this order, we want a printer. That's a material. And we want assets. We should be able to select it now. So let's see, assets, computer equipment. We want one printer, unit price say 300 including VAT. It's done. And finally we want some printer, some paper. Want some printer paper. We need to print the bills out, don't we? So we need paper, and we need some toner for the printer. That's materials we're buying. Now, these are not assets. These are usables. They're going to get used up. So we're going to have to classify these under. Let's see what we've got. This is an expense, really. So what expense have we got that's set up by default? Have we got anything that's office equipment? Here we are, office supplies. So we'll put it under office supplies. We'll put one of those in, and we'll just say we'll buy them together as 100, with including the VAT. Save everything. So that's what we initially purchased from Amazon for start up our business. We now need to post it, so we post the invoice. Description, Amazon computer order. Okay. Okay, so we've done our first bill. Let's just have a look at what's happening. Let's save everything, make sure we save I always like to check to see what's going on. So accounts payable is right. We owe 1,400, and we owe that to Amazon. We haven't paid it yet. It's just in our accounts payable. Our assets now are basically our assets are 3,300. Why is that? So we've got 2,000 that we deposited in, and we've got computer equipment worth 1,300. Now I know that's going to depreciate over time, but at the moment we're not taking any depreciation. If you're doing big companies, you'd have to take into consideration depreciation. For this sort of company, we're not doing that, anything like that. But that's what our assets are at this moment in time. Now I'm not an accountant, so I don't know how to do all this depreciation stuff, but I know that you do depreciate assets over time. Okay, so let's move on. We can't do any business yet because we haven't got any tools for our business, so we need to go and buy some tools. So we're going to go a new bill number 2, and let's say we're going to buy some B and K, billing ID 2. Okay, so what do we need to buy? We need to buy a spade. The first job, we need to buy a spade. We need to buy a lawnmower, spade, fork, whatever you need for this business. So we're going to that's a material item. Our expense account. Now actually, if we go back to our, let's save all this, if we go back to our accounts, a spade is going to be an asset. It's going to be an asset to the company. We own the spade. It's an asset belonging to the company. It could be sold if the company went into liquidation. So it's something that a company owns and controls and that benefits the company. That's what a spade is. Falls under that definition. So we're going to edit this, but we only have at the moment computer equipment as assets. So where's this bill? We're going to create an assets garden tools. So if you allow me to do that, garden tools, say. No, it doesn't allow me, so what did I do wrong there? So we want assets, I don't want that. Well, if I just put garden tools in, what was that going to give us? Say garden tools. What's that going to do? Nope. We set it up last time, it seemed to be okay, so we go garden tools. If not, we'll just have to go back into our accounts and just... So I did that. It says no, we haven't got one of those. Okay, let's go back into accounts. Now, presumably we can go new account, account name, garden tools, and we want it under assets. Yeah, just press OK, because it is an asset. Garden tool is an asset. So here's our garden tools. We've got computer equipment and garden tools. Save everything. Okay, so if we go back here, here it is, garden tools. We want to buy one spade. I don't know how much spades cost. Let's say they cost 30 quid. We're not doing any VAT tax on this. We're not trying to claim back tax from the HMRC. So we'll just paying the tax on this type of business. Okay, so we've done that. So here's our bill. We need to post it. So we're going to post our invoice. Description B&K spade order. Say. May not be the best description, but okay, so we should, if we save everything, we should be able to close that bill down. And so opening balances, we've done all that. So now accounts payable is, that's right, 1430, because we got the extra £30 for the spade. We now own a garden spade. That's an asset of the company. Right, moving on. Let's say we do some work. And we're going to do some work. Was it Mrs. Jones? I can't remember now. I think it was Mrs. Jones. We're going to do some work for Mrs. Jones. Billing ID 1. So I'm going to do some, I'm not, but garden work. We're going to be paid presumably by hours. And what income account? Where's this money going to go? Well, it's going to go into sales, I think. Now we're doing hours. Let's say we do 4 hours. And let's say the unit price is £20 an hour. There's no discount or tax on this. It's very simple accounting. So now we have done that. We've done that entry. Made an invoice. So if we go here, if I print the invoice, here it is. It's £80. Print that out, send it off to Mrs. Jones, Jones Street. But let's say actually we've forgotten. I'm just making this up as we go along. Let's say, because I'm not quite sure how this is going to work, but let's say in July, say July the 14th, we actually did some garden work for her, but we haven't billed her for that. So we go garden work, hours again. Just interested to see how this code works out. Income, because we're in the same bill here. Sales it's going to be, and let's say we did 6 hours then, so we've got to bill her for that. Unit price is 20 again. Okay, so now we've got this, it's reordered itself, so that's the first one. That's quite clever. Save everything. What does that invoice look like now? So because we're in the same bill, it's invoiced at the same time, so that's good. So it says on the 14th we had 6 hours work, that's 120, 80, 200 quid in total. So there's no VAT, we're not dealing with no tax on this, because we're not doing that sort of account. This is just a sole trader, it's not VAT tax registered. Okay. Right, so we've got to post this. Okay, we post it, let's say Jones. That's an invoice, let's say Jones invoice. You could put it, well, just leave it like that for the moment. We posted it. Okay, so where's it gone? It's gone here to accounts receivable. So in my accounts receivable, I've got an order of 200. I've got, sorry, an invoice that I sent out when we're expecting money from Mrs. Jones, 200 quid. I select this one, and I split it. You can see it just gives us some more information here. Okay. Let's move on and let's just do one more customer. Let's do another invoice before we start doing some transactions. So a new invoice, let's say invoice 2. Let's say we've done some work for customer Mr. Smith. So I'm just seeing how this is all working out. So let's say we're going to invoice him on this date. Let's say it's garden work with the spade. It's hours again. Income account is coming into our sales because we sold him some work. Quantity, let's say we've done 4 hours for him at a unit price of £20. That's what the unit cost is. Save all that, go back to this and post it. When we post it, it will post it, so we'll say Smith invoice or Smith work. Yes, I want to post it. Notice it's going to accounts receivable there. Okay. Alright, so we've beginning to take shape a bit, our accounting system, our bookkeeping system, I should say. So what we've got, accounts receivable here, we have got £80 we were expecting to receive from Mr. Smith. We've sent him an invoice, and Mrs. Jones 200, a lot of work for her. Okay, so how do we move on from there? Well, okay, so let's save everything and let's just have a look at it, where we are with all this. So our checking account at the moment is quite healthy. We had a deposit of £2,000 into it. But we've got an order. This in accounts payable, I'm going to say you got to pay this amount now. You know, so we're going to pay it. Let's say we want to pay this on the. We want to pay this on. I'm just thinking about this. Let's say business. We want to process this payment, and so we have to do it this way. So we have to go Amazon. We want to process this bill, and where do we want to process? I think we'll put it on our credit card. Okay, so we're going to put it on the credit card. This is the company credit card. Okay, so that has now save everything. Let's just go back to accounts. See what happens. So the credit card now has 1,400 on it, because in our accounts payable, which is now just £30, we paid that bill, we paid that Amazon bill, and we put it on our credit card, as so many people do. Okay, let's go back to accounts payable. We've still got this, so if we come back, notice that's interesting. The way that this is done, it's interesting that it says, interesting, look, that's the invoice that says it's been paid. that's good. But now we want to take B and Q, so B and K. So we've got BK spade order here. We want to go to our process payment. Let's search for B and K. We've got this outstanding. Let's say we want to pay for the spade out of our bank account. So we're going to pay this directly out of our bank account. Maybe, you know, we've just gone along to the shop and bought it, I don't know, for cash. So it says it's been paid. That's great. Save everything. So now we have got nothing in our accounts payable. But we have this credit card bill. In our business account, it's gone down by £30 because we bought something, haven't we? We've got this owner deposit into it, but we've actually just gone to B&K and we bought a spade, so we've had to withdraw £30 to do that. So far so good. Okay, let's get rid of some of these and let's move on. Now we've been doing some work and we've got these accounts receivable. So let's have a look at that. So we've got Mrs. Jones. She owes us 200 quid. So we've chased her up, phoned her up. She said, oh, it's in the post, got the 200 quid, transferred it, whatever she's done. So we got the money. So what do? We go business, customer process payment, customer, Jones, Mrs. Jones. So we've got that payment now. Where are we going to put it? We're going to put it into our business account. Okay. So let's do that. It says it's paid. Great. So we've got this order has been paid. So we're now chasing up Mr. Smith for his order. So we'll go business, customer, process payment, Mr. Smith. So he's coming from accounts receivable here. Choose that order and we want to put that into our business account. So we press that OK. Right, so we've got those payments made. Save everything. Just if we can move this out, you can see that we've got these are our invoices for payments. We've also got the type here, invoice, invoice, payment, payment. So that's how things work in practice. Save everything. Right, so that's basically how you get started with Gnucash for setting up a small sole trader business and setting up vendors and customers. How do we pay this credit card? That's worrying me. Credit always worries me. So what do we do with that? So let's see, we've got this credit account. So what would we do? Process payment. No, we're not processing a payment. Oh yes we are, we're in liabilities accounts. Amazon. Yep, okay, it does look as though this is the right way. So it's... No, I don't think we do it this way. I don't think we do it this way. I think what we're going to have to do is we're going to have to go into our checking account and we're going to have to do a transaction, and I'm going to do the transaction is pay credit card. Don't like credit. Don't like credit. You need to get rid of credit. So we want to transfer to what? We want to transfer. Where's our credit card here? Ah, here we are, credit card. And we want to withdraw. It was, what was in our credit card? 1,400. So we want to withdraw 1,400. I want credit. Let's save all. Let's see what's gone on. Right, our credit card's gone. That's good. Our checking account is $8.50, which looks about right because we just made a big payment, but we still should have some money in it. So here we go. Here we go. So let's look at our bank account here. So we got B&K. That was our spade. That's okay. We withdrew it, money from it. Mrs. Jones paid us some money, so we deposited that. Mr. Smith paid us some money for gardening work, deposited that. We paid off our credit card. That's our new balance there, and our overall balance now with the is $8.50. That's right. So these are deposits. This is money coming in. This is money going out. Okie doke. I think that's just about it. I think that's all you need to know to get started with using Gnucash for setting up a small sole trader business. Now, just remember what I said. You are not VAT. This is a business that's not VAT tax registered with HMRC. I'll have to do a separate video on that because that involves more steps, but we'll look at that another time. Hope this was useful.